Good evening, everybody. Hope everybody's having a nice summer evening. Oh, yeah, was it 1 or 2 days ago? 3 days ago, it was the longest day of the year. Tonight, we've got the great pleasure of having Jeff Tompkins back with us. He's going to show us some interesting facets of using relative strength. And you probably want to hold questions to the end. Got a video, an interesting video. So, but if you do ask questions, Richard will be able to type in an answer for you as we go along. So with that, Jeff, Richard, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Thanks so much, Steve. It's always a pleasure to be here. Thanks for having us. Welcome to everybody who has joined. We selected a fun topic tonight that I know everybody will get a lot out of, but also I think it will really complement a lot of what Steve teaches in regards to candlestick trading. A lot of the methodologies that Steve is an expert on can be used in conjunction with what we teach tonight. So that was why we selected the topic of beating the market with relative strength. So we're going to show you a unique twist on relative strength, and we're actually going to start out with a fun little video to make sure everybody's awake. So we'll go ahead and get started. All right. Compliments to Richard, who is my partner and will be in the chat box. He created that video for us, and it's going to be an underlying theme of our topic tonight. So thanks to Richard. And Richard will be, again, fielding questions in the chat box, so feel free to type those in as they come up. We will hold audio questions until the end. I've got a lot of stuff to get through. So Richard, you're getting some nice compliments in the chat from Henry and Bill and hey Joe, Bill, Mike, Tim. Looks like you got a nice group of people in tonight. So let's go ahead and jump right in. I'll give you a little bit of background on myself real quick, and then we'll get into the fun stuff. If you haven't attended any of my past educational events, I am Jeff Tompkins. I'm the Chief Investment Strategist of Altos Trading. For some reason, when I upload this slide, it doesn't, in Webinaudio, it doesn't show the bullets, but just kind of run through those with you verbally. So I do have 22 years of experience trading the stock options and futures markets, received professional training at Morgan Stanley at their trade desk, and am currently the founder and a Chief Investment Strategist of Altos Trading. As I mentioned, with over 50,000 members in over 100 countries across the globe, we have a really diverse group of traders and investors that utilize our strategies. And I'm also a hedge fund manager, so I manage capital for my clients at Altos Capital. A lot of the tips, tricks, and tactics we share on our educational events and with our members are strategies that we use in the hedge fund as well. So you're getting kind of a bit of an inside look into the managed money world. I'm also the founder and manager of some of the top performing options and stock alert services on the market. So with that, we will go ahead and just read a real quick disclaimer before we get into all the fun stuff. So we know that trading securities and options involves risk, and prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options, and must meet suitability requirements. We will be going over some both actual and hypothetical results on our session tonight. And of course, we know that due to the time critical nature of trading, brokerage fees, and the activity of other subscribers, we don't guarantee that anyone will mirror the performance that we share in our educational events. All right, so by the end of our session tonight, you'll discover how to gain the extra 1 degree trading edge that can put you ahead of some of the best traders and investors in the world, even some of the top money managers out there. And this strategy is, again, designed to give you an edge over the overall market and can be used in conjunction with other systems, strategies, and methodologies like Steve's candlestick methodologies. And whether you're just starting out or you're a seasoned pro, and we have members of all skill levels and experience levels, it's really must-have information for today's markets. It's very difficult to get an extra edge in the market. So we really do our best to try to get every little edge we can, whether it's through candlestick formations and patterns, and in the case of our topic tonight, relative strength. So let's talk about relative strength and the 212 degree difference. So as we saw in the video, at 211 degrees, water's hot, but it's just standing still and it's not doing much. And we can relate this to stocks or the stock market because a lot of stocks will range or trade sideways or flat or even go down before they make big moves to the upside. And as the temperature of water rises 1 degree, so it's a matter of a 1 degree difference, it starts to boil. And that can create the steam that can power a locomotive train. So it's incredible that that slight degree of difference can go from a static liquid that's really not doing much or capable of doing anything in terms of powering an engine to powering a locomotive train. And that extra 1 degree makes all the difference. So it's kind of like when a stock starts to outperform a major benchmark index or sector and then takes off or skyrockets. So most retail traders and certainly many money managers and professional traders typically will use an indicator called the RSI, or the Relative Strength Index, to gauge the strength of a security. And go ahead and put an X in the chat box if you guys have heard of the RSI or are familiar with it. Yeah, so we have a lot of people familiar or have used the RSI at some point in their trading and investing. Again, it's a really probably one of the more commonly used indicators. And it's for those of you who haven't or have used it maybe with some varying degree of success, it is a momentum indicator, and it's used in technical analysis to measure the magnitude of recent price changes to evaluate overbought or oversold conditions of a security. So it's basically displayed as an oscillator, which is a line graph that moves between two extremes. So it is a bounded indicator, meaning that it has a max min and a max high, or a max low, I should say, and a max high, and those range from 0 to 100. Now this indicator has been around a long time. It was introduced originally by J. Wells Wilder in his book, New Concepts in Technical Trading Systems, back in 1978. So it's been around a long time, and again, it's commonly used. I even have hedge fund colleagues and things that use it. So in terms of interpreting the RSI, the traditional interpretation, just like any other indicator out there, there are different ways to use it, but the traditional way is to base the reading on overbought or oversold. So A value above 70 would indicate that a security is becoming overbought or overvalued. It might be primed for a trend reversal or correction. Now, an RSI rating of 30 or below would indicate an oversold or undervalued condition. So that's typically how the RSI is used. Now, there are more complex methodologies like divergence and things like that that we won't really get into tonight. But this is the basic way to interpret the traditional RSI indicator. Now, there's a couple problems, and there's significant problems with the RSI indicator. So problem number one is that stocks can remain overbought or oversold for extended periods of time. So it's that old John Maynard Keynes saying the markets can remain irrational longer than you can remain solvent. So for those of you who have ever attempted to use the relative strength index indicator, you may have noticed that it can remain below 30 in oversold territory for a long time while the stock continues to go down. And conversely, it can remain above 70 for long periods of time as the stock continues to go up. So it's by itself really not a very reliable indicator, in my opinion, in terms of pinpointing reversals in a security. So that's problem number one. So let's take a look at that and visualize it on a chart. This is a chart of a hot stock right now, Tesla, ticker TSLA, a daily chart, and we've got the RSI indicator plotted below the chart. Now, you'll notice that in kind of the May to, well, actually August to September time frame, there on the left side of the chart, the stock was kind of slightly trending up as the RSI follows the price. And then eventually there in late October, the RSI is registering an overbought reading. So it's telling us that the stock may be overbought and primed for a pullback or correction. But interestingly, what happens is, although the RSI retreats back below 70 for a couple of weeks, it quickly shoots back up, back over the 70 or overbought line. All the while, the stock is taking off. So you can see how the RSI actually gave us inaccurate or false information if we were using this as an overbought or oversold indicator. This is another example. This is Best Buy. And you'll notice that we have a relatively overbought reading on the RSI as it bumps up against 70, and a significant amount of time here in July and August, well above 70, up into the 90 level. All the while, Best Buy is going up. So if we'd used the RSI indicator to tell us that Best Buy was overbought, it would not have given us a very accurate information there. So again, to tie that into problem number one, that would be that just because a security is overbought or oversold doesn't mean it can't continue to be that way for as long as it wants to be, right? This is another example, Amazon. So the RSI is giving a overbought reading in June and July, while Amazon takes off from around 2,400 all the way up until about 3,400, 3,500. So again, this wouldn't have been a reliable reading from the RSI. It would have misled us. So we're going to introduce tonight on the session a twist on the traditional RSI. So this particular method is a variance. It still uses relative strength, but it's a variance of the traditional relative strength index, and I'll explain how and why that is. But let's take a look at Amazon. So you'll notice that the formula that I'm going to share with you on the session tonight is telling us on the left half of the chart that Amazon is exhibiting stronger relative strength or positive relative strength while the stock is going up. That's what we want to see. And you'll notice there about halfway or midway through the chart, we have a red histogram, okay? So after the stock has gone up significantly, the formula is now telling us that this particular stock, Amazon, is no longer outperforming. So the relative strength of the stock is not what it used to be. And you'll see that that coincides with sideways movement in the price of the stock. So Amazon's just basically stuck in a range here. And there's obviously ways to trade this, but if we were buying shares of Amazon, this may not be the best time to do that. The better time would have been earlier in the year in April or May, when this twist on the RSI that I'll share with you was telling us that the stock was relatively strong. Now, problem number 2 with the traditional RSI is the current strength of a stock relative to its past price. So you can imagine the inherent problem with that. And as we looked at on those earlier charts with the traditional RSI indicator, it was giving an overbought reading on those particular stocks when all the while the stock was going up in price. And the reason for that is because it's measuring the strength of the stock relative to its past price. So if a stock is moving higher, naturally the past price is going to be lower and the relative strength reading is going to go up. So you can see how that indicator really has a lot of inherent flaws in it if you use it as an overbought or oversold indicator. Just like so many indicators out there, they have a lot of flaws. And one of the, again, one of the inherent flaws in most indicators is that they're lagging, or they're giving us information based on the past price of the stock. So what if there's a way to bypass that and not use lagging information and take a relative strength reading that doesn't relate the current price of the stock you're looking at, or whatever asset? It could be a Forex pair or a futures contract or whatever, and we take that and relate it to something completely different. So that's the solution. Wouldn't it make more sense to identify a top performing index or sector and select a stock that is outperforming it? So rather than compare the strength of a stock to itself or its past price, why not compare it to another asset that is already performing well? That's the true definition of relative strength. And that's the trick and formula that I'm going to give you guys tonight. So that extra 1 degree difference can take a losing system and give it the steam that can spot the next stock that is ready to explode. And I'm going to demonstrate that for you and show you some examples. So often when a stock begins to outperform a major index or an industry or a sector, it goes on to make a big move. And the key is to identify stocks that shift from underperforming to outperforming relative to a benchmark index or sector. And once we identify those can really be excellent opportunities that can be the golden ticket to beating the market. Because think about it. If we're looking at relative performance of a stock or another asset compared to a benchmark index or a sector or an industry that's already a top performer, that's where it becomes very difficult to beat the market. So like when the S&P or the NASDAQ or any of the Russell 2000, any of the major indices are going up, it can be very difficult to select opportunities that are going to outperform because that's a large index or basket of stocks. And this is where we're going to gain that extra edge, is by identifying opportunities that are beating those benchmark indices. Just to use a kind of a cliche quote, but one that's very relevant, from Jim Cramer, there's always a bull market somewhere. And that can be the challenge for a lot of people in trading and investing, is when we're in a bear market or a market correction, and that's, I can tell you from experience, probably one of the #1 questions we get from our members is, how does this system or strategy or whatnot perform when we're in a bear market or when the market's going down? Well, that's the beauty of relative strength. It can help us identify opportunities that outperform the broader markets. And even in the worst market conditions, there are stocks that are going up. It just becomes more challenging to find them. And that's where relative strength can come in and help you spot these opportunities. So let's look at the twist on the relative strength index, the traditional RSI, in sort of a comparative format here on this chart of Tesla that we just looked at a minute ago. So we have, again, the traditional old school ROI or RSI plotted at the bottom. And we've also got the new formula that I'm going to share with you here shortly. And let's take a look at the difference. So if we look at the old traditional RSI, right, it's sloping up there on the left half of the chart, and it quickly becomes overbought in October, November, and into December and early January. All the while, the stock is going up. But if we look at the new RSI, or relative strength indicator that we're going to be focusing on tonight, something interesting happens here in September. It actually tells us that prior to about September 21st, Tesla was probably not a good stock to jump into. And as we can see, the stock was just basically moving sideways. It was flat, kind of oscillating between $40, $45 a share. But then the reading tells us that it's beginning to outperform the S&P 500. Now, at the time, the S&P 500 was performing very well. It was in a very strong uptrend. So wouldn't it make sense to find opportunities that are already starting to beat a benchmark index like the S&P that is already performing well? And that's what happened here in September with Tesla. It started to outperform the S&P 500 right there around September 21st. And the stock went up over 1,800% in the coming months. All the while, the old traditional RSI indicator was giving us overbought readings. Let's look at another example. This is Teradata TDC. Daily chart, by the way, we're looking at here. So you can see TDC in October, November, December was underperforming the S&P, right? And the stock was basically just moving flat. It was hovering kind of around $20 to $22 a share. May not be a great time to be trading TDC. But then in early or late January, early in the year, it begins to outperform the S&P 500. And over the next couple of weeks, it goes up over 125%. So again, we're not using lagging information here. We're actually spotting opportunities the very day that they occur when they begin to outperform a benchmark index, sector, or industry. And you can see that it gives you a very timely edge for spotting these opportunities. This is actually an example of a security I traded, in full disclosure, traded in my hedge fund. We're no longer holding the position. We are now out of it, but I used the formula to spot this opportunity on Futu Holdings, ticker FUTU, as it was beginning to outperform the S&P. Now, again, at the time, early in January, it was just starting to outperform, and the S&P 500 was performing very well. We were in a very strong market, right? So I wanted to find an opportunity to purchase shares of a stock that was outperforming an index that was already performing well. And that's what happened here with Futu in January. And the stock went up over 380% over the next couple of months. All right, so those are a few examples, and we'll look at some more. But first I want to give you my four-step process for this system. So these are the 4 simple steps for helping find these opportunities on your own. So step 1 is to first identify a top-performing industry and sector. And I'm going to show you a really easy way to do that here in just a second. But first, I just want to give you each individual step. So that's step 1. And we can literally do that in about 5 or 10 minutes, probably less, as I'll show you. Now, step 2 is that once we've identified a top-performing industry or sector, we want to then screen for stocks within that industry or sector. So that involves a little more legwork. We've got to screen through stocks and find these opportunities. And I'm going to give you the formula to identify those here in just a second as well. Now the next step, step 3, is to then compare the relative strength of each stock to an index or ETF that tracks that industry or sector. So that's the relative strength component where we're looking for, we've already at this point identified a top performing industry or sector. So that's our initial edge that we're gaining. And then once we've done that, that's where we're going to compare the relative strength of a security to that industry or sector. And I'll show you how to do that. Now, step 4, the final step, is to select a stock that changes from underperforming to overperforming. So that's kind of the timing component of the system, if you will. This is where when we identify an opportunity, we'd want to look for on one particular day where it was previously underperforming and then begins to overperform. And this is where you could start to blend in other systems and strategies like Steve's candlestick strategies. And you can fine-tune your entries on these opportunities when you see, for instance, maybe a bullish kicker pattern or an engulfing pattern. So there's a lot of ways that you can incorporate other systems and strategies. But this is mainly just designed to give you that extra edge for finding opportunities that are poised to outperform and to make big moves up. All right, so let's start out with the formula. So this is the formula for the relative strength. So again, this is a twist on the old relative strength index indicator, which is much, much different because it's simply comparing the strength of that security to its old price. Now, with this formula, we're going to use two different data points. We're going to use the current, the price of the current stock we're looking at trading. And again, this can be applied to any asset. So I'm going to probably mostly say stocks tonight on the session, but you can apply this to any security. So that'll be our data point number one. And then our data point number two is going to be our reference price. And that is simply going to be what we're comparing the asset or stock that we're looking at trading to, right? So let's say, in that example of Teradata, if we were comparing Teradata to the S&P 500, the data point one would be the closing price of Teradata, and data point two would be the reference price of the S&P, or the closing price of the S&P 500 that day. Okay, and now here's the logic. If stock price is greater than zero, and it should be obviously if you're looking at trading or investing in it, and the reference price is greater than zero, then that's going to give us a log value. And the log value is simply the stock price, so the data point one divided by the reference price, or data point two. So to get the relative strength, we simply take the average of the log value. Okay, again, that's the data point one divided by data point two, the stock we're looking at, divided by the reference index or industry sector ETF, minus the log value length and the EMA length times 100. So those are the two inputs. So the length that we use is a 90-day period. So we want to use 90 days worth of data. And the EMA length is set at 3 periods. So we use a 3-period EMA. And once we run that calculation, if we get a positive value, it's going to tell us that the stock that we're looking at is outperforming the benchmark security. Okay, so there's the formula. Now, let's talk about the secret to finding the top performing sectors. This is a really handy trick that can be done quite easily and for free, which is great. I always love free. So this is and I have no affiliation with this site, but it is one that I use quite often. And it's a great free resource. Although they do have paid subscriptions, etc. They're not necessary for the purposes of what I'm teaching you tonight. But this is finviz.com. So finviz.com is a financial site that provides a lot of different resources from, I believe they actually provide some candlestick patterns, different chart patterns, support and resistance lines, wedges, triangles, double bottoms. So you can find all types of different patterns using FinViz. But we're going to look at one particular thing for the purposes of our relative strength system. We're going to look at the Groups tab. So if you click on the Groups tab at the top of the menu, it's going to take you to a relative performance page. And you can sort this by industry, sector, whatnot. And then what we're looking for is, so basically this is the relative strength compared to the S&P stocks, so the S&P 500. And they break it down by different time periods. So we have 1 week, 1 month, 3 month, and half a year. There's some others, shorter time frames and longer, but those are the ones that we want to look at more specifically. And what it's showing us is how that particular sector is performing relative to the S&P. And you can see that it's stacked from highest to lowest. So what we want to look for is a sector that is performing across multiple time frames within the top 3 rankings. So we notice on the 1-week relative performance, the industrial sector is the #1 performer. And it's outperforming the S&P by nearly 4%. Now, if we go down to the 1-month relative performance, we notice that, once again, industrials is in the top 3 and is popping up as #2, outperforming the S&P by nearly 4.5%. And then if we look at the 3-month relative performance, we see that, once again, it's outperforming, this time by over 11%. And finally, over the 6-month period, it's outperforming the S&P by nearly 30%. So if we kind of pause here and think about this for a second, if we want to give ourselves an extra edge in the markets, wouldn't it make sense, and certainly make it easier on us, to trade or buy stocks in a sector that's performing very well across multiple time frames? And that's the initial edge that this system gives us. So we've spotted the industrial sector as a top performer across multiple time frames. So not only in the near term or short term is it performing well, but it's also performing well in the long term. And by the way, this is not necessarily current. So before you guys all start running out there to buy industrial stocks, this is full disclosure, not a current slide. This is delayed. So, but for demonstration purposes. But you can certainly go on FinViz and find these different performance sectors. Okay, so that was going back to our 4-step process, step #1. So now what we want to do is we want to screen for opportunities within the industrial sector and use an industrial ETF or index to compare our stocks that we're looking at trading or investing in to. Okay, so that's our data point 2, or our reference price. So if we select an industrial ETF and we compare, start running scans and comparing industrial stocks to that, we want to look for opportunities where the stock was once underperforming and then begins to outperform that security. So this is where more legwork comes in. And I'm not going to lie to you and tell you it's easy and can be done, in 5 minutes a day and you're going to become rich overnight. It does take some legwork and homework to do this, but it can often be very well worth it if you're willing to put in the time and effort to do it. So what we see here is in later July, while BLDR, Builders First Source, was underperforming the industrial sector, and as we can see on the chart, the stock was going down, very shortly after that period of time in later July, something interesting happens. It begins to outperform the industrial sector. And interestingly, as the stock was trading, right around $22 or so at the time, it begins to take off and goes up over 100% over the coming months. So you can see the incredible timing of that on this particular example of Builders First Source. Let's look at another example. This is another industrials example, Deere. We're all probably familiar with Deere as one of the top tractor manufacturers in the country, if not the world. So ticker DE, looking at this particular stock, back in July, it was not doing a whole lot. It was kind of flat there for a couple weeks until the formula tells us it was beginning to outperform the industrial sector ETF. And what happens? The stock goes up 122% over the coming months. So did a really nice job spotting that. And we could go over example after example all night long with these, but I just want to kind of give you an idea of some other examples real quick that will give you kind of a frame of reference of the amount of time that these may play out over and the potential magnitude of the moves. So this is a hot stock that I follow very closely, and they're actually, Micron Technology is actually based out of Boise, where I live here with my family. So I've got a lot of friends that work there, and I follow the company's financials and trade the stock from time to time. So I like to follow this one. So on November 12th, I thought, well, wouldn't it be? And by the way, these are hypothetical. These are not examples that I personally traded, but I thought it would be interesting to go back and apply this formula to some of the stocks that I like to follow. So interestingly, when I did that, I found that Micron started to outperform the tech sector. It's a chip stock, if you're not familiar with it, and it was outperforming on November 12th. Prior to that, it was underperforming. And shortly after, the stock started to go way up. And by April 12th, it was up over 72% from when the formula, the relative strength formula, told us it was beginning to outperform back in November. This is another stock that I watch closely, Advanced Micro Devices, AMD. On June 30th, the stock started to outperform its benchmark index. So prior to that, it was an underperformer. Doesn't necessarily mean it was doing poorly, but it was underperforming the benchmark index. So the relative strength told us that if we want that extra edge, we want to wait for it to begin to outperform. And that occurred on June 30th of last year. And then quickly, the stock went up. By December, it was up over 83% from where it closed on June 30th when the formula gave us the alert. Now, this is another hot one, Moderna. We now probably mostly all of us know this as one of the first manufacturers and developers of the COVID-19 vaccine. So this has been a really volatile stock and has gone up pretty significantly once they got FDA approval for early release of their COVID-19 vaccine. On November 6th, this is when Moderna began to outperform the biotech sector. Prior to that, it was an underperformer. And interestingly, what happened, even though our relative strength formula has no way of knowing what the FDA is going to do, it is able to identify an opportunity when it begins to outperform a benchmark index. So in this case, as Moderna is outperforming the biotech sector on November 6th, the stock went up over 160% in just a few short months. So a really big move on that one. I don't do a lot of leveraged ETF trading, but I do do some in the TNA, or the Direction Small Cap Triple Leveraged ETF. And typically, leveraged ETFs are not designed to be buy and hold instruments. They're subject to beta slippage and other things that make them really more useful for what they were designed for, which is intraday trading. But interestingly, the relative strength formula identified that TNA was outperforming starting July 22nd of last year, and the stock went up over 260% by March 15th. And then I'll end with a kind of a really fun one, and certainly one I wish I would have traded myself, but I've actually shied away and steered clear of it just due to the volatility and whatnot. But probably a lot of you are familiar with the new meme stocks, as they call them, this one being one of the first, GameStop GME, that was hyped up in some chat rooms like Reddit chat rooms, etc., to try to create a short squeeze for short sellers of the stock, and they were very successful. So as you can see, if we just use the relative strength, so if we weren't in the Reddit chat room or weren't privy to any of the insider kind of going-ons of the collusion, I guess you would call it, to drive the price of the stock up in the absence of really any fundamental or technical factors that would justify it going up so much, the relative strengths formula actually spotted this on September 14th last year. So at that time, it told us that GME was beginning to outperform the gaming industry sector. And sure enough, the stock goes up nearly 7,000% by January 28th. So that's an extreme example here. We're not going to find a lot of those, right? But pretty interesting to see how that played out with the system that I'm sharing with you guys tonight. So again, these are all hypothetical based on the relative strength system that I'm teaching you, and based on the peak stock price. Of course, it doesn't include broker commissions or fees or anything like that. But pretty cool. I mean, just these 5 examples resulted in a cumulative ROI of 7,400%. So it's always important to use good money management. We really stress that with our members and all of our teachings. But even when you go small, because we do have a lot of members who trade smaller accounts who are just getting started out, these can be great opportunities to start out with small capital, because you can, obviously select your position size and give yourself the chance for some of these really incredible returns when they do present themselves. So let's talk about locking in profits. When we have one of these trades, like some of the examples we've looked at that work out for us, probably one of the most important things in trading is management of the trade. So entry is certainly important, but once we're in the trade, that is basically kind of out the window. It's said and done, and now management of the trade becomes really priority number one. So let's talk about how to manage these trades once we enter one. What I like to do is set a two-profit target, or sort of use a two-profit target system. So I like to set a profit target number one, because we don't necessarily know, none of us have a crystal ball, how far the stock is going to go up if it moves up. So for target number one, I like to set a 5 to 10% initial profit target on the first half of the position. So let's say, just for demonstration purposes, we bought 100 shares of a stock that was showing outperformance on our relative strength indicator. So if that stock goes up 5 to 10%, I would look at exiting the first half of the position. Now, again, because we don't have a crystal ball, we don't necessarily know how far the stock is going to go up. And as we looked at in some of our examples, they can go up hundreds or even thousands of percent. So we want to give ourselves the best chance of capturing the bigger moves as well. So typically what I'll do is, after I exit at profit target number one, I'll move my stop to break even, take profits on first half of the trade, and then it essentially becomes a risk-free trade. I mean, the stock would have to basically gap way down overnight to experience a net loss in the trade. And so at that point, to manage the second half of the position, we would set a 10% trailing stop to help capture the bigger gains. So that's the really simple kind of two-step target process for locking in profits on the trades that move in your favor. Okay, so let's talk about options. How many options traders do we have with us tonight? Do we have any options people in the room? Jim says yes. Henry, yes. Oh yeah, lots of them. All right, Bill, Jace, Michael, Niaz, Rod, and Ron. Yeah, awesome. Okay, so you guys are going to love this part. This is interesting. So I took this screenshot of CNBC back on December 4th of 2020 in the midst of the pandemic. And as you can see by the headline, there was a big surge in options trading that really showed no signs of slowing down, and it really has actually continued as I followed this. So I pulled data off of Piper Sandler, looking at the retail options volume across all retail trading platforms, so every platform in the US that offers options trading. And the volume relative to pre-pandemic levels back in 2019 was up about 50% across the board. So looking at the NASDAQ 49, CBOE 58%. So there's a lot of people moving into options trading is what this is telling us. And that's cool because, it brings liquidity into the market, and that's a great thing. On the flip side of that, it kind of scares me to some degree, being, a long-time options trader myself, and thinking back to the early 2000s when I kind of first started dabbling in options and losing money in options, and how difficult it was. And there's a very steep learning curve there. So, unfortunately, probably we're going to see this volume decline as people get knocked out of trading options, because it is a very challenging endeavor. But I'm sure a lot of you out there have done well with it, hopefully, especially with Steve's teachings and things like that. So let's look at how we could use options and apply them to the relative strength system, because as many of you know, especially if you're an options buyer, timing is a critical component of options trading. So unlike a stock where you can theoretically sit on it and hold it indefinitely, That's not the case with options. They have expirations. So it's very, very important that you can time opportunities across different strategies very precisely. And that's where a lot of people run into trouble. And that's also where the relative strength system can give us a really strong edge, is in terms of timing directional option strategies. So whether you buy calls or sell puts, or vertical call spreads or put spreads, credit spreads, calendar spreads, we can go on and on with all the different strategies out there. This can really give us an extra edge. And the beauty of options, and why most people likely trade them, is for the leverage, right? So a 5% move up in a stock can often equal a 100% options gain, depending on implied volatility and other variables. But remember, going back to our profit target strategy, right? That's our initial profit target, a 5% move. And I can tell you, since we started sending these opportunities out to our members about 2 months ago, now, as of this last week, a little over 60% of these opportunities that we've provided to our members have already hit their initial 5% profit target. So that's pretty good. And many have gone up 10, 20% or more. So that's not even including those, but pretty incredible when we apply this to options. So let's look at a quick example together of how we might use options to play the relative strength system. So this is Apollo Group, APO, and if we look at the relative strength system, we notice that APO is underperforming the S&P 500. Now at the time, the S&P 500 was a strong performer. It was trending up, and Apollo was not following suit, so it may not be a good time to trade the stock there in April, as it moves sideways, around $28, $29. But then something interesting happens in mid-April, right? The formula spots Apollo as an opportunity to outperform the S&P 500, and it actually told us on that exact day that Apollo was beginning to outperform. So again, it's not giving us lagging information like most indicators. So if we were going to play this with options, when the relative strength formula told us that Apollo was beginning to outperform the S&P on April 16th, again, we already knew the S&P was in a strong uptrend. That day, the stock closed at $29.66 a share. So what we could do is look at purchasing the nearest to the money or at the money strike calls by going a few months out in expiration. And in that case, that would be the September 30th strike calls. And at the time, they were trading for $1.70 per contract, right? So certainly affordable. And that's one of the other nice things about options is when used correctly and appropriately, they can help you trade these opportunities in smaller accounts, because just trading one contract of the September 30th strike calls would cost you only $170, right? So it can be done in a very small account. Now, for example, we'll use 10 contracts. So if we had purchased 10 contracts of the 30 strike calls, that would cost us about $1,700 before broker commissions and fees. So let's look what happened. Only 6 days later, as you saw there a second ago on the chart, Apollo started to move up. Okay, so it was outperforming the S&P on April 16th. The very day before that, it was underperforming. So 6 days after the 16th, the stock was already up 5%, and that resulted in nearly 100% move in the option, right? So you can see that there was a $1,650 profit showing in this particular contract, where if you had purchased 10 contracts, it would the base price would have been $1,700. So nearly 100% move. Now we can apply the profit target system that I just taught you to options as well. So rather than just close the whole thing out, and certainly that wouldn't be a bad trade, doubling your money in just a matter of 6 days is a great trade by anyone's measures. But let's look what happens if we use the two-step exit approach. So if we were to close half of the 10 contracts and keep 5 open until expiration on September 20th, let's take a look at what would have happened. So there we have our 5 remaining contracts open. And because the stock continued to go up and the relative strength formula accurately identified this opportunity, there was an additional $4,200 plus in potential profits that could have been captured on this opportunity. So by scaling out and keeping half the position open through expiration, that $1,700 investment could have turned into over $5,000. So that's a 297% ROI, and the stock certainly didn't go up 290%. It did very well, but this is a great way to leverage these types of relative strength opportunities. So we always tell our members, time is not money. It's really the most valuable resource on the planet. You can't earn or create more time, and you certainly can't get it back. I'll admit, when I first started out in trading about 22 years ago, I certainly wasn't, looking at getting into trading for more time. I was looking to make money, like most of us are. But as I begin to, trade and become successful, I realized that what it was really doing was giving me more time and more freedom. So money, always can be replenished. We can work harder, work more, we can trade more, we can invest more. It can be replenished, but we can't get time back. And so, I used to trade my time for money, but the reason I really trade now, and people often ask me, why do you do this? Why do you share all your secrets and strategies, and why do you manage money and things? Well, I do it so I can have time and give back to the trading community, and we really strive for our members to be able to have more time to do things. So a lot of our strategies you'll find are low time commitment strategies that can be done in the evenings, on the weekends, when the market's closed, because we have a lot of retirees and people that have full-time day jobs and things that want to be able to do those, or have the time to do the things they enjoy, whether it's traveling or et cetera. And that's really why I do it. So again, I live here in Boise with my family. We live down on the Boise River. I'm a big fly fisherman. This is me behind my house, fly fishing. I love to go backcountry skiing with my wife, or take trips to Europe, or sailboat trips out in the Bay, which is actually my old stomping grounds. I grew up in the San Francisco Bay Area. And moved to Boise in 1995, but I still have traveled down there quite a bit. This is a recent trip my wife and I took out on the Bay in San Francisco. This is really why I do it, and the lifestyle that it's afforded for me. So hopefully now, when a stock gains that extra 1 degree edge and begins to outperform a top index or sector, it can start to boil and often results in explosive moves to the upside. So it doesn't happen every time, but it really, from my experience, has given our members one of the strongest edges in their trading and investing. And I've revealed to you tonight my 4-step process for identifying these opportunities. Now, the one thing I did mention is it does take a lot of time and legwork to sift through thousands of stocks every week to find the very best. So I've given you all the information and tools you need to do this if you want to do it on your own. And that's a big thing for us. We never just give people things with no background or education. We always teach our members how to do what we're doing if they want to do that on their own. So they have the option. But we also give the option to do the heavy lifting for you. So if you don't want to spend the time or the legwork doing that, we have our team working to find these opportunities for you. If you want to receive these opportunities without doing the legwork, we're going to give you that opportunity tonight. So we offer 5 to 10 opportunities on average, just like the ones I've shown you on our session tonight, emailed to your inbox and texted to your smartphone every week if you want them. That's an optional service. And as I mentioned, and the reason we really selected this education for Steve's event tonight, you can actually take any indicator or system you're currently using and apply it to our top performing relative strength stocks. If you're using candlestick patterns or certain stop loss methodologies, those can all be adapted to work with our relative strength picks. So this is really more of a pick service that gives you the opportunities that are outperforming and lets you decide if you want to take those opportunities and whether you want to apply a system or a methodology to that. So this is what comes with our relative strength alert package. It comes with 15 to 20 trade alerts per month. So just like the opportunities we looked at on our session tonight, we hand select those and send out those to our members. And typically, again, we do about 5 to 10 per week. It's going to be more like 3 to 5 per week, and then 15 to 20 per month. And these are all short to medium term swing trades. So as we looked at, like with the Apollo example, some of them will play out in a shorter period of time, in that case 6 days. Some take a little bit longer, weeks or maybe even 2 to 3 months. So they're more swing trading opportunities that have potential for large gains, as we saw in some of the examples. So we alert you the very day a stock begins to outperform a top performing sector or index. So you get the alert that very evening. In fact, we have one lined up to go out tonight. So we're sending out an alert tonight with our opportunities for this week. And this is what that alert looks like. So it comes with the ticker symbol for each stock, the company name, the stock price, the profit target 1, profit target 2, and our analysis, or basically we let you know what the benchmark index or sector that we're comparing it to and why the stock is expected to outperform. So you basically get everything you need to know to take advantage of these opportunities. And again, you can also apply your own system or methodology to these opportunities. So here's everything you get with the relative strength signal package. You get 12 months of our relative strength signal service. Normally that's a $1,499 subscription. You get the priority text alerts. Normally that's a $299 retail value. We're going to throw those into the package as well. Is our invitation-only Facebook group access. So we have over 800 members in our private Facebook group that you can interact with that trade a lot of the same strategies like the relative strength system, and you can join that if you are a Facebook user. We're also throwing in a special options course. So we have a comprehensive options course with all of our best option strategies that you can use and that are designed to be used in conjunction with the relative strength system. And that's valued at $900. We're giving all this out after market hours, as I mentioned. So you don't have to day trade. You don't have to worry about missing something when the market's open if you're at work or you're out doing something fun or traveling. Everything comes out after market hours. And again, as I mentioned, we're going to be sending out our alert for this week tonight. And that includes 15 to 20 hot picks per month. Ultimately, our goal is to help you guys to learn to trade stocks and options with consistency. And that's, of course, priceless. So we're going to throw in a couple bonuses just for Steve's group tonight. Bonus number 1 is our professional trading series online course. So this is over 9 hours of content that you can access at your leisure online, containing our best stock, options, and Forex strategies. And again, these are great strategies to use in conjunction with the relative strength system. That's a $595 course, but we're throwing it in for free. And then we're also going to give you guys access to our new ebook, How to Create Risk-Free Trades. This is a money management based ebook that teaches you some cool tricks, kind of like the one I showed you tonight with our profit target exit strategy with the relative strength system. And it can help you mitigate or even eliminate risk from virtually any trade. And it's a really handy book to use, again, in conjunction with the relative strength system. So we're throwing that in, valued at $97 as well. So the total retail value on our package is over $3,500. We're doing something really special for Steve's group tonight, and we're cutting the price by 84%. So we're taking a lot off this and offering it up at only $49 per month. So you get everything that you see on the screen if you want us to do all the leg work and send you our relative strength picks every week. And this is not a any sort of a contract or locked-in commitment. You can try it out for a month and see how you like it at only $49. And if you decide you want to continue, like many of our members do, you are grandfathered in and will never pay any more than $49 a month. So it's a really great opportunity and deal. If you want to take advantage, Richard will be putting this in the chat box. I just see it popped up. You can go to altostrading.com/RS for relative strength 49 for the $49 a month special. And we are going to limit the opportunity because we can only take on so many new people at a time. There's a lot involved for our team, getting people set up, answering questions. We're a very hands-on organization, very customer service centric, and we don't want to take on more than we can handle at any one time. So we do limit it to 50 seats. Once those are gone tonight, we will take the offer down and it will go back to the $1,499 retail value. So again, everything you get with this package includes access to our best trades sent right to your inbox. You don't have to sit and watch your computer all day. They're sent after market hours via email, and if you prefer, also priority text message if you don't have access to your computer or your email. And that comes with easy to read instructions, including profit target levels. So I'm going to get to Q&A here in just a second as we're coming up on the hour. One of the common questions we get is, who is this for? Is this going to work for me? Well, since I don't know everybody personally, that's hard to answer, but I can tell you how we designed it. We designed it for everyone from beginners to seasoned traders. And we have people of all skill levels and experience levels who use our relative strength service. People who work full-time jobs, part-time jobs, retirees, traders worldwide. We actually have, as I mentioned, students in about 130 countries. And now with markets really being so global and access to global markets and trading has become so widespread, we have members even outside of the U.S. who use our service. And we've designed it really for any account size. So when we send these alerts and opportunities out to you guys, you'll see that there's a range of stock prices. So there might be some more higher price stocks as well as some lower price stocks. So we want to give you a range. And then, of course, you can decide how many shares to purchase and scale it up as your account grows. And you can certainly start small if you're just starting out. And we suggest that, always start small with anything you're trying for the first time. And it's for traders who want to learn how to trade on their own, but also for those who want to be spoon-fed. So that's why we teach the system. So if you do want to do it on your own, you have the information and tools you need to do that. But we also realize that not everybody wants to do that. They want just to simply pay $49 a month and get the 15 to 20 picks per month. So we will offer that to you as well. And we have a lot of happy members. Damien says short and concise, straight to the point, no fluff, no bluff, real stuff that makes money. D-Lem says Jeff does a great job with option strategies, great for beginners and intermediate traders. Chris says, first of all, I want to thank you for providing such a first-class alert service. It's really the only one that delivers on promise, and I've tried a few. After having demo traded for nearly 2 months, I'm now happy to go live. Dennis says, so I just want to say that finding Jeff's training and strategies have been life-changing. For the very first time in my trading, I don't feel afraid to trade, as I know I have a number of strategies that I've learned. And Winford's one of our Inner Circle members that has used a lot of our different services, and he says the alert service has benefited him tremendously. In fact, he earned over $90,000 trading the alerts in 1 year, and he's a retired federal law enforcement officer, and this is his second career. So he says trust the process and you will succeed. All right, so what happens next? Well, first, as we're getting new members in, and welcome to all of you, by the way, as you're joining. It's great to have you on board. You're going to automatically be added to our members list and directed to the Trade Alert membership registration page. And then once you're registered, you're going to receive a confirmation email in a few hours confirming your access. Now, the first alert's going to go out shortly after our session. I'm going to send that out myself. And not to worry, we'll make sure that everybody who joins tonight gets that. So by this evening, you will have that alert if you join tonight. You get exclusive access to the members only portal. So you can also log into our members portal and check those alerts. Again, if you don't have phone access or email access, we do everything we can to make sure that you don't miss an alert. And again, you get your first alert tonight, actually. And then we're going to throw in those two bonuses I mentioned, our professional trading series. That's a $595 value, and that comes with over 9.5 hours of training and 9 modules with our best option stock and Forex strategies. You can watch it anytime. It doesn't expire, and it's a great resource to use in conjunction with the relative strength system. It also comes with our trade tracker spreadsheet. You can keep track of all of your relative strength trades. It includes trade selection, trade adjustments for those of you who trade options, chart reading, trade management, etc. And we're also throwing in that ebook for you as well. And we also, as I get into Q&A here in just a second, I like to kind of knock out the common questions and really dig into the ones that are helpful for people. This is another common one. What's your guarantee? Well, we have a guarantee. We have a 90-day guarantee. If you don't make at least your membership fee back in the first 90 days, we give you an extra year of the signals on the house. So that's a $1,499 value. You can go ahead at that point and pause your subscription. We won't charge you anything, and you can give yourself more time to make these opportunities successful for yourself. That's our goal there with our 90-day guarantee. So we're going to throw that in as well. All right, so I'm going to go ahead and open it up to Q&A, and I'm going to have Richard mic up. Since I've been so busy presenting, I haven't had a chance to monitor the Q&A very actively. So I'm going to go ahead and have Richard mic up and relay some questions to me, and we'll take a few of those. If I know we kind of ran over the hour. If I don't get to everybody, you can email us support@altostrading.com or call us toll free. Our offices are now closed, so you would need to call in the morning, 800-895-9348. You can call tonight, but you'll be required to leave a voicemail there. But if you have any questions, shoot us an email. And again, welcome to everybody who's joining. Richard, if you want to go questions before we pass it back over to Steve.
Yeah, absolutely. There's a couple that came through. This is a great group. A lot of great questions, a lot of great comments and compliments tonight. Tom was wondering, when you were talking about the options earlier, were you using leaps with those trades?
So a leap is generally classified as a long-term option. I don't do much in the way of leaps trading, but that's kind of actually going back to my old school options education stuff. But generally, I kind of consider a leap like a 12-month or further out expiration, 12 months or further. You certainly could use leaps with the relative strength, but our suggestion is somewhere in the neighborhood of 3 to 4 months. Typically, when these opportunities make their big moves, because really it is a very time-critical system. So again, remember, you're spotting that outperformance the very day that it starts to occur. So generally, when there's follow-through with that, it occurs in a relatively short period of time. Pretty much all the examples we looked at on our session tonight played out within 3 months or less. So generally, 3 months is sufficient to go out in expiration. And of course, you can always go more or less depending on how much you're willing to pay for the option, et cetera.
Okay. There's a few folks that have some questions more about the formula, and I know that there's probably going to be a replay, so we won't go through that too much, but kind of pick some of the best points.
Yeah. I think Steve will be sending out a replay. If you want, we can always email. You can shoot us an email, and we can email you the formula. But basically, it's pretty simple. If you have any questions on it, we can explain that to you either over the phone or via email. But hopefully, you guys will get a replay of this and be able to go back on that.
Okay, great. I think that's probably the better answer because so much you covered there, and I think it'd be good for people to be able to watch it. Do the people have to trade all the stock picks that you send out to them?
Certainly not. In fact, you need a pretty. We intentionally provide an abundance or overabundance of picks, and because if you'd have to have a really large account to trade every single one of them, unless you're just trading like one share. We do have some people that are trading every single one and just trading smaller number of shares for diversity purposes. But even if you just picked out a couple each week, it would be sufficient to diversify. And that's a great question because a lot of times when new members start trading the relative strength picks, they wonder, well, are they listed in any type of order? Is one better than another? They're not cherry picked at all. So they each meet the criteria that I shared with you on our session tonight. So they're all outperformers of a benchmark index sector or industry that we're monitoring that is one of the top performing sectors in indices or I'm kind of losing my frame of thought. Industry sectors or indices. So they all meet the criteria. One is not necessarily better than the other. Generally, people pick one out from another based on the price of the stock or the number of shares they're able to trade in their account, or whether it has options available on it. Most of the picks that we send out are optionable stocks, so they have options that trade on them. But we do notate that in the alert, so you know immediately at a glance whether that particular pick has options available on them. So yeah, it just kind of depends on how diversified you want to be and your account size and position sizing.
And you covered this earlier, but Jace had the good question. He just joined for 49 bucks a month. He wants to be sure that he can cancel anytime.
Oh, welcome, Jace.
Contract.
Yes. Yep. Correct. Yeah, you can cancel anytime. You're not locked in. The only thing you're locked into is that price if you want to continue. So you're grandfathered in. You'll never pay more. And frankly, you know, like I said, we're a very customer-centric company. Even if you pause it or stop the subscription and come back, you know, a few months down the road, we'll still honor the $49 per month for you. We'll get you back in since you were a previous member. So we don't, you know, ever raise the price on you or anything like that. But yeah, you can cancel anytime if it doesn't fit your trading style. We understand, no problem. That can be canceled.
All right, and another question came through a little bit about the alert. So
actually, let me pause you there real quick, Richard. It looks like WB said the PayPal link is having issues. Typically, so there's an acknowledgement box that you need to check before you click the PayPal button on the order page. Make sure you check that, otherwise you'll get a spinning wheel and it won't go through. If you continue to have problems, just shoot us an email, and if you get us an email in before the 50 spots are gone, we'll honor that. So, okay, Mike just got it. Okay, cool.
Good point. So, what was I saying? Some folks are kind of asking about options, and there's options talked about. These alerts are actually, you know, stock alerts, and you can trade options with them, but they don't actually have to trade options, correct?
That's correct. Yeah, they're purely a stock alert, and then again, we select a lot of these opportunities on stocks that are optionable because we do in our membership base have a lot of options traders, so that's kind of the reason behind that. So I'd say probably 80 to 90% of the picks are optionable, but we don't provide an alert around that with options. So if you want to use options, I mean, you certainly don't have to, but if you want to, you would select the strategy. So since these are all stock picks that are designed to outperform a benchmark index or sector, they would be bullish, generally, you know, classified as a bullish pick. You would use a bullish option strategy like a long call or a short put or a vertical call spread, or there's a lot of different types of strategies. Obviously, you can structure around that, but we just don't provide the instructions around the options trades.
Great.
If you have questions about the option, you know, like the gentleman asked about expiration, we're happy to answer those for you to help you out.
Henry has a good question. What's the average stock price for these? Are these high-priced stocks?
That is a great question. Thanks, Henry. So they range. In fact, let me look at the alert for tonight. So like tonight, and we try to select a range to give you, you know, choice. You know, we've had stocks that we generally don't go under $10 per share on a stock. They tend to be a little bit too speculative. Tonight, the lowest price stock is $28.70 per share. And we have the highest price one up at $3.35. So that might be one, you know, if you're going to trade option, if you're an option trader, you might want to, you know, use options on that one or just trade a low number of shares. But again, you can adjust the number of shares you trade regardless of the stock price, and you know, incorporate your money management principles that way. So.
Let's see, and could you repeat the email address if they have any more questions after the fact?
Sure. Let me get back over to that. So here's our email and phone if you want to contact us or have any questions.
There you go. And some folks were asking, what account can you use the payment link? And it looks like you certainly can. You don't have to have a PayPal account. They'll give you the option of paying via credit card on PayPal's site.
Yeah, yeah. Yeah, you don't need to have a PayPal account. We take Visa, MasterCard, American Express. You can use any major credit card, and you can also use PayPal if you do have PayPal. All right, well, I just want to thank Steve so much for having me. It's always a pleasure to be here. I know what a loyal following Steve has, and frankly, you know, we don't do a whole lot of joint presentations with other educators like this, but I can sincerely say that Steve is one of the best out there. So it's always a pleasure to be here and meet his members and be able to share our strategies with them. And so Steve, thanks so much for having us. Thanks to all of you for joining. Welcome to everybody who is on board now with the Relative Strength Service. We look forward to having you on. Keep an eye out for that alert tonight. And I'll go ahead and pass it back over to you, Steve.
All right, thank you, Jeff. Thank you, Richard. Take a look at his service. I mean, it's straightforward. This is something that just improves the probabilities of your trading, putting in your mental arsenal. So the more pieces of information you can add when you're doing an analysis, or at least have that information behind what the recommendations are, the better the probabilities are going to be in a good trade. So Jeff, Richard, very good information. I appreciate you being here. And thank you, everybody.
Thanks so much.
Yep, we'll see you all in the chat rooms.